I want to start by saying, although crypto is down, we need to look at other asset classes first. Zooming out will help us set the stage for what's going on in the world. And zooming out, we can see everything is down right now. The NASDAQ is down significantly. Anything high growth, anything tech is not doing well. Even what's generally considered the safe bet in investing, the S&P 500, is down 10% in the last month. That's a massive amount. This is largely the result of uncertainty. Investors are waiting for earnings calls to come out this week and some policy decisions from the Federal Reserve that may tighten up monetary policy just a little bit. Basically, investors are concerned that the Federal Open Market Committee, the group that decides interest rates, are going to bump up rates quickly in order to fight against inflation. If rates do jump up significantly, this has the simple downside that it'll be more expensive to borrow money. This matters in stocks, especially high growth stocks, because they borrow money in order to grow at a rapid pace. So it makes sense that growth will slow if borrowing costs of money increase. Now, it's unlikely that the FOMC will decide to all of a sudden hike rates dramatically, as they know this would cause absolute chaos in the market. Instead, it's much more likely that they set a target date in which rates will slowly begin increasing. Now, how does this relate to crypto? Well, in times of fear, investors, especially big institutional investors, will move money to safer asset classes in anticipation of further drops in the market. This means as that rebalancing occurs, more money is pulled out of crypto and out of speculative assets and even non-speculative stocks and moved into more safe assets. One way to track if money is being moved to safer assets is by looking at the 10-year Treasury yield. The yield of this government-backed bond will typically decrease in times of uncertainty. And if we look at the charts, the 10-year note has actually decreased 8.5% since last week. Again, this is big money making moves in anticipation of monetary policy changes. Then what we see is the fear from one market creep into other markets, which is what we're seeing in crypto. People tend to assume that if it's time to be scared in one asset class, well, we better be fearful in this other asset class as well. And the funny thing is that this kind of ends up being a self-fulfilling prophecy. People pull money out, markets dip, fear increases, more money gets pulled out, markets dip even further. It's this vicious downward spiral. Thanks for tuning in, and if you enjoyed this content, make sure you subscribe to the main channel as well right here.